Welcome to this video. Today I'm going to be doing a stock analysis of Target. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, what does Target do? Well, they sell essential goods and makeup and all stuff in that regard. So they are quite huge, and they are quite huge in USA and Australia. And right now, I really don't like the stock, and I'm going to get into that now. Why don't I like the stock? Well, I do like the products that they sell, but given the current climate we're in, chances are it's going to keep falling. As you can see here, we have a quite sharp fall all from the way back in April 2024. Just look at this. Insane drop, as you can see right here, from 181 to 94. So, as you can see, it's a halving in the price almost. And it's just been almost a straight line. We do see, of course, some rebounds, but more or less it's a straight line. And the problem with Target right now is also given the new tariffs. That's a problem for them because they import a lot of their stuff, because a lot of makeup and other essential goods are made in other countries, which means that they are going to have to increase their prices, which is bad for business because they make a lot of money on the products when they're cheaper or relatively cheap in the economy. And another problem for Target right now is because they did see some boycotts because they rolled back on their inclusion program. So just all in all, not great for Target. Now, as you can see here, previously we have traded almost as low, but it's quite a volatile stock. As you can see, if I go even further back, all the way back here to 22, as you can see here, it was trading at 253. The reason it was trading this high back then was during COVID, when everybody was at home. Their makeup sales exploded because everybody had to do makeup and stuff like that, and it just people had to do stuff. And I think that is also the reason why it's trading so low now, because we did see a bit of a rebound here, as you can see, way back in 24, but then ever since then it has been a shit show downwards. We also have these three negative earnings, as you can see here. We missed them by 1%, missed them by 19%, and again missed them by 16%. So all in all, not that great. Now we did see earnings in 74 days, but as you can see here, the past earnings minus 16%, really not that impressive. So, and the revenue was also down by 1.2%. So really, all in all, just not that great. Now, as you can see, the dividends here, they're actually quite great, but at 4.7%. So if you're a dividend investor, this is a great company for you if you don't really care that much about the price target, or if you're going to hold it for quite a while. Target might be a great option for you because I do see it moving upwards in the future, but short term, I do think it's going to keep falling. And as you can see, they pay them out 4 times a year, both in May and in February and in November and in August. And then in May again, so of course 4 times a year, which means you can more easily get dividend snowball rolling. So for Target, if you are a dividend investor, Target is a great company. As you can see in the earnings, their margins are all over the place. Just look at this net margin line; it is all over the place, and that is a lot to do with international travel and tariffs and stuff like that. And as well as look at their margins, they are very low, which means that if their prices increase just a little bit, or the cost of the products they're buying increase a little bit, well, then they have to rise their prices even more to make the same margins, of course, which means their net margin is going to fall. So currently we're just not in a great place for the Target overall, so it's really not that great. Now let's just look at how they make the money. As you can see, it is a ton of different stuff, as you can see, all over the place, but beauty is a very huge one, and hardlines and apparel and accessories as well. So of course, quite a huge portion of the stuff in beauty. Imagine that almost all beauty, imagine that 50% of the price on beauty products increase, just for an example. Well, then they would then have to increase the prices even more so you could get the same margins, which is of course a huge problem. We don't know yet how much the margin is going to be, or if there are going to be any tariffs on beauty products, but the worst case scenario is still possible. Now, performance of the stock, as you can see, it's a very old company, all the way back in 1969. So we're just going to go back to 2010. As you can see, past 15 years. As you can see, we have some huge winners and some huge losers, so it's a bit all over the place. And the reason that is because it is a quite margin, or can you say, reliant business. So when their margins drop, well, then so does the stock, because in times where margins fall or inflation rise, they're going to make less money. Just look at 24 and 23, where 2 years after we had huge inflation. As you can see also in 22, even though the prices were quite high back then, it fell. And that is because when the inflation is high, are you going to go out and buy new makeup? No, you're probably not. Of course, you might need a lipstick or mascara, but you're not going to get 5 or 3 because you like some new colors. You're just going to get the one you used, and that's just going to be the one you stay with. Just the same as with clothes. When the inflation is high, you don't go out and buy new clothes all the time. So it might be a bit of a problem for Target if the inflation keeps rising in the United States. Now, if you look at technicals on this, as you can see, for the day, it is a strong sell, and for the month, it is still a sell. Just look at this over the moving averages. Basically, every single one is a sell except for the whole moving average, and we have one neutral in the Ichimoku baseline. So really, it's not that great. I do think it's going to keep on falling. But however, as you can see down here in the analyst rating, we have quite a different perspective. We have 39 analysts and we have 11 strong buy, 1 buy, 25 hold, 1 sell, and 1 strong sell. However, I do think this down here, the strong sell is much more likely than the other ones in comparison. As you can see, however, annually, as you can see, they are expected to make a bit less money, so it's fluctuating quite a bit. But I do think my vote is down here in the strong sell. I do think it is going to keep on falling down at the end of the year. It would not even surprise me if it went below 80. My personal target price tag for the year is 78, so just below 80, because I just don't really see the case for it right now, unless we see some improvement with the tariff. That is really the main problem with the target, is the tariff and the inflation, because if the tariffs are removed, well, then they can still buy the products at the current prices and get same margins. If the tariffs increase and they have to buy the products more cheaply, more expensive, well, then they have to rise prices even more. And the inflation is currently rising in the United States, and that is just bad for business if they then have to raise their prices as well. So all in all, it's the perfect storm for Target at the moment, for just everything going wrong. Now that was my analysis of Target. So if you like this video, please don't forget to leave a like and subscribe. And of course, as I said, this is financial advice. This is purely for entertainment and educational purposes. And if you want to see any other videos, please leave the comments in the comment section below, and I'll take a look at those. Thanks for watching.